Welcome back to Income Trading 101. Today we're going to take a look at Barrick Gold Corporation. And this video is being recorded on March the 25th. It'll be posted on Friday, March the 26th. So we're going to go ahead and just pull this one all back. The stock's been trading for a long time, so it's good to be able to just get an overall view. Woo. Did you see what just happened? When you take in the full view, right? The full view of gold and what this company has done and where its price currently sits, it gives you an entirely different view. So we went from thinking that we were approaching highs to seeing that we are actually significantly lower than the previous 10-year high. So what I'm going to do, and this is out of order, but just because I'm going to get rid of this data soon, I do want to start this video off actually with a little Fibonacci retracement from this previous top all the way down to this low. And I'm just going to pull it all the way over and see where we are right now before we even start looking at moving averages and whatnot like we normally would. So hope you guys don't mind me going out of order, but that little view was significant enough to where it's worth taking a look. So check that out. Right now, we pulled back all the way. This is a 10-year look, right? So we had this significant fall from August of 2011 all the way to bottoming out in 2015. We've kind of pulled up and down and whatnot since then. And the pricing that we saw in August of 20 actually was right around the 50% retracement level, and we currently are between the 38.2% level and the 23.8% level. Very interesting, right? Very interesting to me. So let's go ahead and get rid of this. We'll get rid of this analysis and go ahead and take a closer look at the current time frame like we normally would. I'm going to stretch this on out. We're going to space this on out again so that we can see our analysis fully. All right. So we're going to look at really the 1 year time frame, which would get us just past the bottom from the pandemic. And let's go. So I'm going to go ahead and do our moving averages, just the way we normally do. For equities, well, for all of these, but definitely for equities, I like to use a 10-day, a 20-day, at least start with a 10-day, a 20, and a 60. And then we use those same time horizons across the board for some of the some of the other time exchanges. So it'll no longer be a 20-day; it'll be a 20 a 20 period that will correlate with whatever time frame we're looking at. We'll go all the way down to the 15-minute here in just a second. So there we go. So you can see, no surprises. We had an uptrend, and when we were in that uptrend, the 10-day was higher than the 20, and all of that stayed above the 60. You had a strong period of consolidation, which is interesting because back here in the summertime, you definitely had a bullish gold market, and it took a while for that to be clear, coming all the way back to July. From July through August, that was very clear. And then a little bit more congestion before we finally started with the sell-off. Had a big drop after earnings back in November of 2020, and we've really, we had a little bit of a pullback, a little gap move that got covered up as well. And as of now, we appear, at least on the daily, to just be on one of the legs, if you will, if you're an Elliott wave theorist, one of the legs of the downward trend, right? And right now, at the daily, we have some congestion because we've got the 10-day between the 20 and the 60. So let's take a look at the hourly and see how that looks. Man, it's really tight. We're going to have to expand this on out for the hourly so we can get a better view. It's one of the things I do like about using TradingView, so I can get the view that I really want. So on the hourly, we can see there was a nice little crossover back here in February, early to mid February, before this fall off, and we had almost a month, or certainly 3 weeks of uptrend, and now we appear to be pulling back lower with on this one all three moving averages in line for a lower market. Let's take a look at the 30 minute. 30 minute, all three are in line for a lower market as well. And I would imagine the 15 minute is going to be similar. Yep, the 15, all three are in line to head lower. So overall, I would say the tighter time frames of the moving averages are all pointing to a downward trend, even though there appears to be some tightness or some congestion on the daily chart level. I'm just pulling this on in to so that we get a better view, a full view. I mean, look at this. In March, just a week ago, really, on the daily chart, a little more than a week, you had a low all the way of to $12.65 a share, and we had that all the way to a high just a few days later. I'm sorry, that was March of 2020, all the way to this high in August of 20. We had a high of $31.22 per share. That's huge. I mean, 100%, more than 100% move in that stock, and before it came on off. So that's quite a wide range for us to have to analyze, especially when we take it to smaller time frames. So let's go ahead and kick over to the MACD and see if the MACD is going to give us any additional insight, anything worth looking at. So on the daily, we can see that really since October, it's just been oscillating in the oversold area, but it hasn't crossed above to produce a true buy signal, which is good. This is the perfect example of why I like to wait on the MACD and the signal line to cross into the positive, is because you might have seen this crossover here in December as a buy signal, or this one here in March as a buy signal. And while the one in March was a mini buy signal, I think this stock can end up heading a bit lower, right? Let's take a look at the hourly. Oh, didn't mean to do that. All right, click on hour. And here we have a little bit more oscillation, of course. I'm going to try and spread this out so we can see some of the price changes a little better. We did have a sell signal here earlier in the week on, what would that have been, Monday, I think that was. Monday or Sunday. And just fell on lower since then. So, and certainly not looking for a buy signal anytime soon on this stock. Let's see. Now we did this crossover on the 30-minute chart. This crossover below the zero line would be a buy if it was pulling higher and going across the zero line. But with the MACD, which is the blue line, crossing below the signal line, that actually is more of a bearish indicator than a bullish, even though it was a crossover below the zero line. And on the 15-minute, just to make matters even more thorough, we had a crossover earlier actually late last night, yesterday afternoon really, and it has that is showing a continuation of this downward move. So both the moving averages and the MACD seem to be pointing to lower. Didn't mean to take that to 1 minute. Seem to be pointing to lower prices, and that's no surprise given this. We've got a nice little channel here. I'll just go ahead and draw it out. So, I mean, it doesn't get much clearer than that. Certainly can drag that on down, and you'll notice that when I do these, I don't necessarily drag it all the way to this top. It's 2-day, and I don't capture this. I don't force it to capture any of the extremes. My goal really is just to get as much of the data as I can, and if I happen to miss 4 or 5 days, but I pick up, 60, 70 days of data, more than that even in this, then to me that's more valuable. So this is clearly trending lower. So it would take a counter trend investor to actually come in and actually decide to buy this stock. You might actually be right. However, that's not my style of trading, especially given that so much actually pointed to this stock heading lower. So we did the Fibonacci analysis of the larger move. Let's just do a Fibonacci analysis of the smaller uptrend since 2015. So let's go ahead here. I'm sorry, 2019. That have been up. Actually, the low was in 18, September of 18. We're going to do this analysis here, pull it on across, and keep it there. So right now, we have crossed the 50% level of this move too. Now, what's really interesting about that is that, this top here, if you remember, was close to the 50% retracement of the last move. So seeing that we crossed the 50% and now came back, and we're sort of hovering, we're not right on it, but we're within, within 60 cents of it with the current price. We could end up seeing some reoccurring with that. And you can see that that same level played as a bit of resistance back in August of 19. And that really was the last time that it played a significant role for this stock. We can pull it on out. We've got similar levels of resistance here on February the 10th of 2017. Again, February of 14. So it does help sometimes to look at the larger picture just to get a better view of what all is going on with the stock. In general, I'm a fan of going with the trend, even if it's a short or long-term trend. I would call this really a shorter term trend. However, given that the trend started, this downward move started in September of 2020. So we've got, let's see, roughly 7 months since then. 7-month downward move, depending on your time frame for holding this stock. Probably that's significant if you are used to trading things for a week, 2 weeks, a month, 2 months. So this has been a strong down move. I'm not looking to break that anytime soon. And I don't even think I would get bullish this stock again until we started approaching making another more recent high, which is fully possible given where this stock has come from. So that's it for today's analysis. Feel free to leave a comment. Let me know if you trade Barrick Gold or not, because this is one of the ones that we've seen volatility in, and some guys have really made good money. And I'm sure someone's lost some money too, but there's been a lot of opportunity in this stock. So if this is one of the ones you trade, feel free to leave a comment, and definitely, if you would, subscribe to the channel. Thank you guys so much for watching. Happy trading.